All right, let's get you a prominent market voice. Samir Arora, fund manager at Helios Capital, joins us with his assessment of this news on the Mauritius tax treaty talks with the Indian government. Samir, thanks very much for taking out the time. Do you think this news has been perhaps blown out of proportion a bit, because this particular incident is likely to take these talks are likely to spread over a long period of time?
Well, there are a number of reasons why you can say easily that this has been overblown. Number one, normally when a treaty is negotiated, it's not going to happen in less than 9-12 months. Today or yesterday, whatever, the newspaper reports only say that there is some talk of renegotiating, whether it's everything, some parts, whatever, number one. Number two, we have never heard of a treaty being negotiated or implemented with retrospective effect. Number two. And number three, the main thing is that anyway in India, long-term taxes are zero. So this discussion on whether coming via Mauritius or not, as far as the stock market investors are concerned, is for shorter-term investments that investors may have made. So therefore, today to attribute that investors are dumping, because I heard some questions on some channels saying that our investors from Mauritius are selling stock. Why would they sell anything? First of all, even if it was retrospectively applied to anything that they held for longer than 1 year. But in reality, we know that these things by a government, and particularly when this government today does not take a decision on anything, that suddenly an Indo-Mauritius treaty, they will want an outcome within the next foreseeable future. That means 3, 6, 9 months. I think it's out of the question. But then it is implemented. If it is changed, if everybody is taxed, first of all, it will be very unfair, because even US itself does not tax foreign investors other than on dividend. But even if it is taxed, yes, from there on in future, foreign flows may be affected a little bit from whatever is the level at that time, because investors would then evaluate that on their shorter term flows they will have to pay tax. But that would mean that India has to negotiate Singapore treaty, they have to negotiate with Cyprus and everybody else, because the same treaty and variants of it exist with other nations also. So I think in the end nothing will happen, because no other country charges tax from foreigners. But if India chooses to do it after 1 year or whenever it gets implemented, then they would be shooting themselves in the foot one more time. But either way, nothing that is happening today, tomorrow, or in 2011 for sure, and even a little bit beyond that.
Samir, morning, Neeraj here. You're saying that this is probably overreacting, but the kind of falls that we've seen, do you attribute this purely to trading activities, or could there be more than meets? I mean, GTL Infra is a separate case in point, but some of the others that have fallen as well.
No, but that's what I'm saying. See, first of all, anyway, market was weak and the other markets are weak, so you can give any reason. I am only talking about the Mauritius part.
Sure.
That for anybody to assume that this treaty is going to impact people today and they should start dumping and making them lose 10-15%, which may be less than what they would pay if today even government said pay tax on even retrospectively, which never happens. So if you are attributing anything to Mauritius today, that part is overreaction. The rest of it, I don't know how much it should be, but in itself there didn't seem to be a reason for the market to fall 3.5% and 4% if it was anything else. So at least that initial part was clearly because of, as always, Indians being trigger happy, and in the end not really making money from shorting in a sort of a panic-like situation. So I don't know beyond that for the moment.
Right, but how do you see the near-term sentiment of the market then, Samir? Given the fact that there is still that bit of uncertainty which would play on the market's mind, even though, like you pointed out, this is a long-drawn process. But in the wake of that uncertainty of where talks might be headed, do you think the market sentiment would still be brittle?
Well, if it is brittle for other reasons, maybe you can say one way or the other. But for Mauritius, I think in the end nothing will happen. I think at the end of the day, Indian government knows that other countries do not charge taxes to foreign investors in the stock market. Now, whether you do it explicitly and openly by agreeing that foreigners don't pay taxes, or you be shy and say that, we charge taxes, but we allow them to come through Mauritius, which is, I think, the route that the Indian government took. The point is, it is not Mauritius government's fault. Effectively, it is a deliberately created structure to let foreign investors come to India without taxes, but which is not wrong, because foreign investors don't pay taxes in other markets, including in Singapore, Hong Kong, USA also. So therefore, the point is that is a different choice. But that whether the government wants to, create new rules like they create for many other things. But what I'm saying is that for the next 12 months, that is not going to come into the picture. So all the sentiment and other things and reality would be determined more by our monsoons and government taking infra decisions and, inflation and all these things. And this point is for the moment a red herring, and maybe it becomes an issue after a year, 2 years, but normally we are not used to reacting to decisions which may affect us after 2 years.
Samir, Nikunj also joining in. Samir, looking at the way how the government currently needs money by the disinvestment route, do you think it is highly unlikely that Government of India will do anything which could spook Indian equity markets?
No, well, if you're talking in respect to Mauritius treaty alone, because they've done many other things, whether they like it or not, they cannot do, because the Mauritius treaty, as I said, even if it is renegotiated, even if you go on a fast track, we have never ever negotiated these kind of treaties in 2 and 3 and 4 and 6 months. Because ultimately the Mauritius guys may agree, but you know that in their heart of heart they don't want to agree to everything that the Indian government says, because that would mean flows coming through Mauritius to be less. And secondly, who says that the Indian government really wants to tax everybody coming from Mauritius? On one hand, we say that everything in India is, routine and foreigner money coming back and owned by politicians, owned by people, and then suddenly you say that we want to be holier than thou and tax everybody. So at the end of the day, we may do something, but it is not going to be done in the very near future. And secondly, you are unlikely to collect any taxes, because I assume that we will not go so far as to apply these treaties retrospectively or changes in treaties. So it will only be for future investments, and future investments first they have to happen before somebody collects taxes. So all these things are not going to make any difference to the real numbers of collections and things like that from a government point of view. And in the meantime, of course, our market goes down and makes everything else more difficult. But that, today I will not overly defend that they will support the market or that they won't let it fall, because first they have to be there somewhere for us to know whether they will let it fall or let it go up. Right now we don't know where the government is.
So is it too early to buy this panic, Samir?
Well, in short term, we are actually doing a little bit of buying, but those were stocks which actually fell for a few seconds, 8-10%. But for stocks to be down 1 or 2%, actually it's the same as what it was on Friday. We think it's good, but we have realized that this market wants to calculate hourly returns. But broadly, if anybody has a 9-12 month period, I don't see why they should be very off. But you can wait a few days here or there. But don't sell and think that there is a panic coming because the foreigners will be taxed. That's all I'm trying to say in this one.
In your long short portfolio, are you looking at covering your shorts then?
Actually, instead of covering our shorts, we just, little bit, not even a lot. We tried to buy today when it happened some stocks that we own and which we know are pretty good and were down 7-8% for a few minutes. But we are not covering the shorts because those shorts, are in a sense, we would rather buy some longs than cover the shorts, which we have found with great, belief that they will work for slightly longer time.
Let me guess, you've added more HDFC banks today?
No, because it didn't fall as much.
But the Delta Corp...
The problem is when you buy those kind of stocks, you will buy stocks that are down 8%. HDFC Bank doesn't fall 8% so easily.
What about some blue chip names? I mean, Nikunj gave out one in HDFC Bank, but do you think this fall is an opportunity to perhaps buy some blue chip names?
Well, the thing is that there is a bigger blue chip in India. Somebody just wants to buy blue chip, and that is the market itself. My belief has been that investors should start looking at individual stocks after they have bought the argument that India, other than its shorter-term cyclical issues of government decision-making, which in a sense is cyclical or not cyclical, but is a shorter-term event, because either they will take decisions or they will not be there after a few months or years. And secondly, the inflation issue will both look okay in the next 6 months. Because inflation, because of, anyway, the interest rates seem to be peaking, and because oil seems to have peaked and commodities prices seem to be correcting and stuff like that. And government decision making, just by the way governments work and people work, that you can't just sit on your hands for the next 2 years, that some decisions will be taken which would then make it appear. These decisions could be as simple or as unconnected to the market as a change in the cabinet or a cabinet reshuffle. It could be oil price hike. It could be retail opening up. It could be land bill in the current introduced in the session of Parliament. So it could be things which would just, in some sense, be connected to the economy, but doesn't have to directly impact any one stock. And all of them would appear as and not appear. They will do it. I think that the government will do one or all of these things. They're all being talked about. They're all not out there far-fetched things, but reasonable things. And some or all will be done, which would make us feel that the government has gone back to its business of business. And then we would talk about other things. And the other things are okay. You saw advanced tax collections are okay. The normal elections are okay. Monsoon is okay. Market has corrected. And if the world is slightly mellow and not cracking apart, which is a separate issue, then 5-6 months later, it's nearly guaranteed that you would feel that you should have bought it somewhere during these 5-6 months. And we know that 98% of the people would not have done it, and they would continue to hate the market and the marketmen who would have done this bold step and made some money. And
right. So I'll just get a bit specific out there. You know, a name like Reliance Industries is at 830. While they may be concerned, there is a sense in the market that sub 900 is a good buying opportunity for Reliance.
That is very good to hear, but I have no comments on individual stocks like that.
Okay. So if you were to looking at buying into this market at this juncture, what would you essentially buy?
Well, if it's talking about me, I would buy what I have, which I don't tell you what I have. But for your viewers, it should be they should buy into India first. To tell an Indian retail investor who buys nothing to suddenly say buy this particular stock, I think makes no sense for him, because he's not bought the argument first that Indian stock market is a good investment to start. He doesn't have to buy a stock. He can buy a fund, and there are so many funds which have done so well. But they are not doing it. So my dialogue with the end investor through your channel is that wake up to the fact that India is a good investment, maybe not today and not for everything to be bought in one day, but to average in. And secondly, later on when the market does well and other investors have made money, don't be jealous of them. Don't start hating the market. Don't say market is made up of insiders and this and that, because they had the guts to buy and believe in India and you didn't. Because that is what I find. Whenever the market is up, the guys who don't own make it look as if it's some insider's game. It is game for big people. It is not. It is just that we have people who believe in it and they make and they do well and historically have done well, and that will not change suddenly. But you are not going to get individual stock recommendations out of me. So
no, that's okay, Samir. But just one important update that perhaps you would want to react to. The CBDT saying, Central Board of Direct Taxes saying that India has yet to start talks with Mauritius on the tax treaty agreement. So that perhaps comes in as a clarification and also a corroboration of what you just mentioned.
And that's what I'm saying. Even if they start, because the other side, that is the government of Mauritius, does not want to really from their heart of heart really want it. Secondly, from the Indian side, it is not clear that everybody in India will want it, because many of the people in power would have their own money coming in via Mauritius as per all the stories that we hear. So therefore, this will be a long-drawn process and it will not be done retrospectively, and anyway, long-term capital gains tax in India is zero. So it is not going to make anybody panic out, but it may slow down future things once it is done. But you could even say the other way around. You could say that somebody will accelerate his investment into India before that, knowing that from a certain date. Suppose we knew that from 2012 April this treaty will no longer be in the current form. It may actually, in theory, although in reality I don't think it matters, but in theory people could come and invest before that, knowing that they will be covered by the current rules and not future rules. So today to panic and make stocks go down 10 and 15% because Mauritius-based investors are selling a complete scaremongering.
All right, Samir, we'll leave it at that. Thanks very much for joining us.